So, one of the most proven strategies for making money in financial markets is to follow trends. That can be as simple as buying stocks when the trend is up and selling when the trend changes. This is called trend following, and it's a trading style that has been around for decades and seen a lot of success. Trading System 1 then is a simple trend following system that uses moving average lines to identify stocks that are trending upwards. Moving averages are great because they show the objective price trend and they're easy to backtest. When the 10-week moving average crosses over the slower 18-week moving average, we're going to say that's an uptrend, and that's going to be our signal to buy. This is the simplest trading system on the course, and this is a trading system that I created quite a few years ago now, but it still seems to be performing well, which is why I've included it here. So this is a portfolio long-only system where we can hold a maximum of 10 stocks at any one time. Let's look at the details more closely. Whenever the 10-week moving average crosses over the 18-week moving average, it signals a new uptrend in a stock, so we're going to buy that stock and add it to the portfolio. Whenever the 10-week moving average crosses under the 18-week moving average, it signals that the uptrend is now over, so we're going to sell the stock and it will drop off the portfolio. In addition, we have a market timing filter here so that we can only take trades when the 50-week moving average on the S&P 500 index is sloping upwards. So this is what I've called a bull market filter. When the S&P 500 is sloping upwards, we'll be in bull market mode and we can trade normally. When it's sloping down, we won't be allowed to enter any new trades and the portfolio will slowly move fully into cash. Hopefully, using this rule will keep us out of the market during nasty bear phases. Importantly, we're going to calculate all the moving averages using the open price and then execute our trades on the close. This will help us to get on board the trends early, and it avoids any look-ahead bias in our results. Most people use the close price to calculate their trading signals and then trade on the next open, so hopefully we can beat them to it by trading slightly earlier. In terms of the portfolio, we're going to be allowed a maximum of 10 open positions at any one time, and our initial equity for the simulation will be 10k. This isn't meant to be a perfect number of positions, but it's just something I've chosen for the purpose of this simulation. So we're going to split our capital equally between each one of our 10 positions. So each trade will be worth 10% in other words, so this is an equal weighted portfolio. I should also add that this system trades completely on weekly timeframes. So this type of system is perfect if you want to run a portfolio but don't have the time to trade every day. In terms of ranking duplicate signals, if we encounter more than one signal, we're going to prefer the stock that has the highest RSI 14 value, which stands for the Relative Strength Index indicator, and our value here will be based on the previous day's RSI. And if you're wondering why do we need this ranking, well, it's because sometimes we'll see several stocks making moving average crossovers, so we need a way to choose between those signals. This is the ranking which we will define using the position score AmiBroker formula. The ranking ensures that we're buying the strongest trending stocks, so we're buying stocks that have a moving average crossover and also strong RSI. Alongside all of this, we're also going to avoid any stocks trading below $2 a share and any stocks with average volume less than 100,000 shares. This is because we don't want to trade any illiquid stocks, and with a 10k account, I think this is fairly reasonable. We're also going to use trading costs of 1 cent per share to simulate commissions and slippage. So here's an example of the kind of trade setup we're looking for in Gilead Sciences. You can see that the 10-week moving average crosses the 18-week moving average, giving us a buy signal. And then we close the trade several weeks later on when the two moving averages cross back again. And up the top here, you can see how the averages were calculated using the open price, not the close price. So I'm now going to test this trading system on the S&P 1500 universe of stocks using AmiBroker and using a starting capital of 10k. And this data includes historical tickers, so there shouldn't be any survivorship bias. This means our results in theory won't be influenced by any delisted or merged stocks because we're going to be including those in our database. We're also going to be using trading costs of 1 cent per share to simulate commissions and slippage. So, running the simple trend following system on the S&P 1500 universe returned 11.96% annually between the 1st of January 2000 and the 1st of January 2015, and we got this result with a maximum drawdown of only 22%. And this compares favourably with a buy and hold return of 4.12% with a drawdown of 55% on SPY, which is an ETF that represents the S&P 500 index. Moving the dates forward, we can now test the system on a small amount of out-of-sample data. So running this system between the 1st of January 2015 and the 1st of April 2016 returned 10.55% with a maximum drawdown of 11% and a win rate of 50%. Overall, this simple trend following system shows some promise, and we were able to beat the buy and hold benchmark from the S&P 500 index. I created this system some time ago now, but it still manages to perform fairly well and pick out some nice winning trends in stocks. I can't find any problems with the formulas and it seems to be working properly. The addition of the bull market filter helps keep us out of the market when stocks aren't going up, and by entering our positions on the close, we're able to move faster than other trend followers might be who wait for the next week open. Even so, you'll want to test the system for yourself on paper, and you may want to experiment with more stress testing, such as increasing commissions, trying different portfolio sizes, different start dates, etc. I'm now going to run through the trading system backtest again so you can see the tests being done in real time and see the accompanying stats and output from AmiBroker. After that, we'll move on to the next trading system.